and welcome to Deep Dive on NewsX World. I'm Ellie Richardson. While the headlines have been dominated by trade truces and tariff tensions, a quieter but far more strategic battle is being fought over the very building blocks of the 21st century. On February the 4th, Washington, D.C. hosted the inaugural Critical Minerals Ministerial, led by U.S. Secretary of State Marco Rubio. Delegations from over 50 nations gathered at the Department of State with a singular mission to break the strategical on the global supply chain on minerals essential for everything from smartphones to stealth fighters. Let's dive into the details. The core of this summit was the unveiling of a sophisticated economic shield, coordinated price floors. Vice President J.D. Vance explained that the current market is failing because it punishes long-term planning. To fix this, the alliance is deploying 3 hard capital tools. Adjustable tariffs. The US and its partners will set reference prices for minerals at every stage of production. If an external adversary attempts to flood the markets with cheap, subsidized materials to undercut allied miners, border-adjusted tariffs will automatically trigger to raise the import price to the agreed floor. Contracts for difference. Inspired by renewable energy markets, governments will guarantee miners a minimum revenue. If market prices fall below the floor, the state pays the difference. If prices surge above it, the companies remit a portion of the upside back to the public coffers. Project Volt and offtake deals. Trump's $12 billion Project Volt acts as the ultimate backstop by guaranteeing purchases through long-term offtake agreements, some lasting up to 10 years. The alliance ensures that new mines in Australia or refineries in India remain financially viable regardless of volatility. This isn't just trade policy, it's state capitalism designed to neutralize China's predatory pricing weapon. By removing revenue uncertainty, Washington hopes to unlock hundreds of billions in private equity that has previously been too terrified to compete with Beijing. Beijing currently processes roughly 90% of the world's rare earths, and the ministerial was explicitly designed to oppose what Washington calls economic coercion. Listen in to what Marco Rubio had to say about the objective to the new coalition.
We have 55 partners that we're hoping to enter into collaboration with. Many have already signed on, and the goal here is very simple. We all understand that having a reliable global supply chains and critical minerals and processed and finished materials are critical to everything we do, as I pointed out in my opening statements to the group. And I think this is a broader mistake made by the industrialized and developed world, as we all sort of fell in love with the design of these things, but forgot that in order to design something, you have to be able to build it, and in order to build it, you have to have the fundamental materials necessary to make it with. That's the key goal of a critical mineral supply, and today it's heavily concentrated in the hands of one country. And that lends itself to, at worst case scenario, being used as a tool of leverage in geopolitics, but it also lends itself to any sort of disruptions, like a pandemic or anything that could political instability.
China, meanwhile, has issued a strong report saying that maintaining an open, inclusive international trade environment conforms to the common interests of all countries. Let's listen in.
维护开放、包容、普惠的国际贸易环境，符合各国的共同利益。各方都有责任为维护关键矿产的全球产供链稳定与安全发挥建设性作用。同时，我们反对任何国家以小圈子的规则破坏国际经贸秩序。
So, where does this alliance go from here? The ministerial has produced a framework agreement on cooperation. While non-binding, it sets an aggressive 6-month timeline to identify and fund priority projects across the globe. We are looking at a shift from free trade to secure trade. The US Exim Bank has already issued nearly $15 billion in letters of interest. The goal is an integrated mine-to-magnet pipeline that never touches adversarial soil. The bottom line, the era of relying on a single global supplier is over. The Washington Ministerial has drawn a line in the sand, signalling that geopolitics and geology are now permanently intertwined. We are now being joined by Peter Cardillo, who's a chief economist. Thank you for so much for joining us all the way from New York. By establishing price floors and targeted tariffs through the Forge Alliance, are we effectively creating a two-tier global market, one for clean allied minerals and one for cheap adversarial ones? If so, how much of a security premium should consumers expect to pay on end products like EVs and semiconductors?
Well, there's no doubt when you put a price floor that you create some sort of a two-tier system. And so that means that higher prices could be ahead. The question is, what happens when you remove those floors? It's like, let's say, price controls. And then you have a real problem on your hand, because generally the market seeks its own level, and it's usually at higher levels. So the answer to that is most likely you would be paying higher prices.
And coordinated price floors protect domestic miners during gluts, but they also risk incentivizing overproduction. How can the alliance prevent a moral hazard where miners produce inefficiently because they know the government will backstop their losses if the market crashes?
Well, that's a hard question to answer, because from experience, it's rather difficult to say you're going to get a certain amount at a fixed price. At one point or another, the governments might abandon, and so then the miners are left holding the bag. And so it's a tough question to really answer with a precise decision.
And President Trump's $12 billion Project Vault aims to stabilize the market by acting as a buyer of last resort. However, if China continues to flood the market with subsidized minerals for years, could this vault turn into a fiscal black hole where the government is forced to stockpile devaluing assets indefinitely?
Very possible, yes. That's a good possibility. You know, we see that with strategic stockpiling of crude oil products and crude oil, and so yes, it becomes somewhat of a perpetual nature.
And how do these coordinated tariffs and preferential trading agreements square with existing WTO rules? Are we witnessing the formal end of the globalized commodity market in favor of a fractured economic order where trade is determined by geopolitical alignment rather than price efficiency?
I would say in part, probably so. But again, you know, it all depends how far we go with isolation that is usually created by tariffs, and of course by trade agreements. So that possibility exists. But I think when the moment of truth of how these tariffs may impact on each individual country, that they could be subject to change and barriers basically redefined.
Thank you so much for joining us here on our episode of Deep Dive. It's a pleasure to speak to you.
Thank you.
And that wraps up this edition of Deep Dive. We'll continue to follow the story and bring you all the latest developments. Stay tuned to NewsX World for in-depth analysis.